So, hi guys, welcome back. Today we're going to be looking at SEA Limited. SEA Limited is a tech conglomerate company headquartered in Singapore, but they operate mainly throughout Southeast Asia and now are expanding into Latin America as well. It was established in 2019 and it's the holding company for an e-commerce company called Shopee, a finance company called SeaMoney, and a video game company called Garena. So SEA Limited has a market cap of $143 billion. And currently the company is only profitable from its gaming division. When the first quarter came to a close, SEA had close to 650 million quarterly active gamers, out of which 12.3% were paying. This is well above the industry average and is significantly up from the 9% that paid to play from a year ago quarter as well. If you look at their online shopping app, Shopee, it's the most popular shopping app downloaded in Southeast Asia, and it's quickly gaining steam in Brazil as well. Even though the pandemic has lifted online ordering, we've seen gross orders and gross merchandise value soar for years, well before the pandemic took shape. The March-ended quarter saw gross orders rise 153%, with the gross merchandise value doubling to almost $12.6 billion. For that context, that's more gross merchandise value than Shopee did for the entirety of 2018 in one quarter already. Shopee could be the company's biggest growth driver this decade, and it could increase its sales over the next 4 years as well. And third, SEA has its digital finance service segment as well, SeaMoney. Since many of the fastest growing emerging markets SEA operates have regions that are underbanked, it is offering a digital mobile wallet service to its residents. Currently, the company has more than 26 million paying customers and logged in $3.4 billion worth of mobile payments in the first quarter. And all things considered, it could be incredibly important into the SEA growth into the future as well. If you look at it, ARK Innovation ETF has invested into SEA Limited as well. So Cathie Wood has a very big push behind this company's growth into the future as well. So if we look at their first quarter 2021 results, we can see that they had a very solid revenue growth. They had a 147% year-over-year total GAAP revenue, out of which 117% year-over-year growth in DE bookings and 250% year-over-year growth in EC GAAP revenue as well. If you look at Garena, which is their digital entertainment gaming sector, they had a continued growth of their user base. Their monthly active users grew 61% year-over-year, from 402 million in quarter one of 2020 to almost 650 million now. If you look at their paying users grew even more, 124%, from 35 million in quarter one of 2020, close to 80 million in quarter one of 2021. If you look at Shopee, which operates in the e-commerce, they're extending their leading position. They saw gross orders go up almost 153% year-over-year, from 0.4 billion to 1.1 billion gross orders, and they saw their gross merchandise value up more than 103%, from 6.2 billion to 12.6 billion now. If you look at their digital finance service, they have accelerating adoption. They had more than $3.4 billion in mobile wallet payment volume in quarter one of 2021, which is up over 200%. And they have more than 26.1 million quarterly paying users, which was up 145% compared to quarter one of 2020. If we look at their gross profit, it was up 212%, from 207 million in quarter one of 2020 to more than 645 million in quarter one of 2021. If you look at their non-GAAP earnings before interest, tax, depreciation, etc., they had a positive year this year, from negative 70 million in quarter one of 2020 to 88 million in quarter one of 2021. There's a breakdown over there, but overall you could see they increased and had a positive earnings before interest, tax, etc. If you look at their cost and expense, they've had a burst in earnings before interest, tax, depreciation, etc. Even though their cost of revenue increased, they have more marketing expenses. They've spent even more on research and development, and they have increased their general and administrative expenses as well. Overall, you can see a general trend is all of these have either doubled or more than doubled over the last year. However, the company is still running at a net loss. They increased their losses from 281 million in quarter one of 2020, and it has gone all the way to 422 million in quarter one of 2021. And if you look at their net loss, excluding share-based compensation, it's slightly less, from 240 million to negative 320 million in quarter one of 2021. If you look at their cash and cash equivalents, they have had a very solid compared to the last year. However, they have reduced slightly since quarter four of 2020. So if we look at what is the future growth for this company. So Garena is, I believe, one of the biggest growth next to e-commerce. E-commerce has already seen massive growth throughout Southeast Asia, but today we'll be focusing more on Garena. So Garena's largest growing markets comprise of Southeast Asia, Taiwan, Brazil, Mexico, India, North America, Latin America, Russia, and the Middle East. More specifically, you can see the Americas and Southeast Asia. Therefore, we think the investor should be able to appreciate the growing opportunity for Garena. It has created Free Fire, which is an award-winning battle royale game, and it is the segment's most important driver in terms of growth. Garena operates in some of the fastest growing markets globally and has a deep understanding of the dynamics in these regions. We look forward to closely working with Garena in offering users new and exciting titles in the years ahead, as this was a statement made by Tencent, which owns a 22.6% stake in SEA Limited, and they can see the future growth as well. So we have Cathie Wood and Tencent backing this company. If you look at Garena's growth, it has been increasing its growth since quarter one of 2017 and saw a massive jump in 2020, but solid growth even before that. If you look at the quarterly active users from Garena, we can see this consistently increasing. Once again, we saw a boost in 2020, but the growth was present even more, and 2020 just accelerated. Look at their paying users, had a massive jump in 2020. They had a massive jump at the beginning of 2019 as well. But overall, the company has seen solid growth in paying users as well, which creates a reoccurring revenue stream, which is very, very positive for the company, as they'll be able to make future purchases based on how many people are paying. It kind of becomes a subscription fee for the company. The active users and paying users have seen its organic growth, as active users posted a compound annual growth rate of 84.2% from 2017 to 2021, while its paying users had a compound annual growth rate of more than 90% from 2017 to 2021. In addition, between quarter four of 2017 and quarter four of 2019, it had an active users compound annual growth rate of 101%, while its paying users saw a compound annual growth rate of 115% as well. So between quarter four of 2019 and quarter one of 2021, we have seen a reduction in the percentage growth, but the numbers of growth have been exceptional as well. So if we look at Garena bookings, which takes into account changes in deferred revenue, they had an 81% compound annual growth rate from 2017 to 2021, which is an even faster revenue compound annual growth rate of 66.2% over the same period, and it shows a very good link in the company's ability to grow its deferred revenue. And it also shows how positive and how well Garena stays with its users. The most important thing is that Garena has been truly instrumental for SEA Limited and has finally become profitable, giving the company access to a lot of money that it can reinvest into Shopee and SeaMoney, and slowly they can use this growth from their gaming segment to invest in the rest of their segments, which can make it a very profitable company in that regard as well. So if we look at over here, we can see the stock price has had an amazing last 5 years. If I scroll down here, the stock price has risen from just over $15 all the way to $275 now. If I go down to the last year, the stock had an amazing 2020. But I still feel like this stock is quite overvalued in terms of where the company is at. The company is not exactly profitable. The stock price is exorbitantly high. And their PE ratio is, since the companies are profitable, they don't have a PE ratio, and the price to sales and price to forward earnings are still very, very expensive. So I do believe this stock has a very good profitable chance into the future. It looks like an amazing growth stock, but it just slightly overvalued for my liking. However, it does look very promising over the next decade, and I would love to see this stock grow, and I'll be keeping an eye on it. If the stock does drop in the near future or even in the long term, I will be definitely adding to my position. So if you do enjoy it, consider subscribing. It is free and it does help me out a ton. If you do choose to invest, make sure to do your own due diligence. And thanks for watching, and I'll see you in the next one. Bye.